Good morning, everybody, and welcome to What's Hot on the Open here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock, and we are going to take a look at everything that is going on here in the U.S. markets. Now, let's brighten up and give a little perspective on this particular day. And you're seeing a market that's basically grinding around some earnings and economic data. We've seen global PMIs come out, and they've been pretty positive. As a matter of fact, here in the States, yesterday we saw that the Chicago PMI came out. That's what I call it. It's called something else now. But it actually came in a little bit lower than expected. It is actually about 6 points lower than the June number. So while it's still north of 50 at 56, which is showing growth expectation going forward, it's dropped off significantly. We're going to watch that closely. But the global PMIs have come in really solid, especially out of Europe and China specifically, as well as in Japan. We did see a drop off though in India. Check out everything that all those details on our overnight action report. But taking a look at the S&P 500 right now. The S&Ps currently are trading at 2476. That's good for a 570 to the upside. What's notable here, Sprint came out up 9.8%. If you take a look at Sprint, this telecommunications name has been in an M&A talk for quite a long time. Seems like there's a heightened anticipation that this could potentially have some sort of an announcement. Again, this is purely speculative, but you can see the volatile action that's been going on, basically trading above and below its 20-day and 50-day moving averages with some pretty significant movements. Let's watch this one closely. A lot of headlines revolved around this. Taking a look at the Dow Jones, everyone's going to be watching this one for 22,000. Whoop-de-doo. The Dow has been moving to the upside because of the likes of Boeing and General Dynamics, a whole plethora of different solid earnings and performance names in the Dow 30. Now, with that being said, we're starting to see some names, though, that are basically putting a lot of consumers and traders and investors on notice, specifically Ford. Now, Ford came out, basically their sales numbers were extremely disappointing. The stock's down 2.8%. Now, it's bounced off of its lows, but it's trading at $10.90. This is also weighed on GM, which is, I believe, trading right around 35. I think it's been there forever. Actually, 34.78, down 3.35%. So you're seeing that the U.S. automakers are actually trading in a very bearish trend. As a matter of fact, we see that it just basically sliced through the 20 and 50-day moving average. Folks, that's telling me that there is a trend shift that's occurring in U.S. automakers. That is something we need to keep an eye on, especially since jobs. We got to watch this. We got to see this, see how this is going to play out. Dow's holding up, though, despite that. The NASDAQ moving to the upside, up 20 at 58.99. That's good for $19.20 to the upside. Everybody is going to be talking about and waiting for Apple. So let me give you context right now. Apple right now is running at an 87 implied volatility rank. For those of you that have no idea what I'm talking about, think of implied volatility as that gauge of potential violent moves. Okay? So in other words, the gauge will go higher if there's an anticipation of potentially moves like what we saw here last week in Apple, going from 154 down to 147 and some change. Now, Apple is trading right now at 149.18, so it's right at its 20-day and right above its 50-day moving average. There's a battle here with the bulls in Apple. Any miss on revs, guidance, anything of that nature could really pound the stock. Now, could that be a melt up or a meltdown? Don't know yet, but what I do know is that they're pricing in about a 2.5% range, either up or down in the stock. That's what the options are telling me. That's what the current implied volatility rank is telling me, that you basically can see almost a $5 range, either up or down right now. So as high as 154 where we saw resistance, or it could get down as low as 144 where we saw in the past where there is some support. right? A break either way to the downside or upside by any amount more than a couple of bucks is going to get you through the 20 or 50-day moving averages. That'll give you some insight on whether or not the bulls or bears are starting to gain some control in Apple. Couple other names that I want to talk about are UAA, Under Armour. Came out, had earnings down 4.8%. Beat both on both revs and earnings expectations. But here's the deal. They're restructuring. Bottom line is that they had to come out and their Q3 guidance, they're going to be flat on revs versus an expectation of up 11.6%. That has got the stock down almost 5% today. That means that those of you that are in Under Armour, you got a challenge. But we saw this challenge actually start to transpire back here. This is about 3 weeks ago. A break of the 20 and 50-day moving average showed that the bulls were losing control. And as a matter of fact, they tried to gain it back about 10 days ago and then just resumed to the downside. Saw a challenge yesterday, but it settled below. The bears are clearly in control in UAA. Under Armour. Another one that I like to keep an eye on is CMI. That's Cummins. The reason I like to watch Cummins is that this is a company that produces engines for big trucks. And if you've been keeping an eye on the transports, and if you've been hearing what I've been talking about for the last couple of weeks, transports have been getting demolished. And you can see Cummins came out. Basically, they had strong orders, but they missed on their earnings. And so the bottom line is investors want more earnings growth. And there is very little room right now for any type of miss. The market is now showing that they will punish stocks that don't come in on earnings, on revenues, especially if they don't come in on both. This is something that we're going to see if this is actually starting to become more of the norm, since you have to basically have a market that's priced for perfection, and the market looks to be punishing this. Stocks down 6.7%. This is something I want to watch very closely, because while it won't put pressure on the tech markets, it's going to start putting pressure on the small caps. Now, the small caps have come back from their lows today, but they're now in the battle zone, folks. This is a yellow flag. A break below on the Russell 2000 of 1415, that's going to be a potential red flag for any further upside. If small caps continue to lag their large cap brethren, that is going to be a sign that the U.S. economy is not growing at a pace that is going to be giving some sort of growth factor that's going to keep investors feeling good about what's going on in the markets. Taking a look in the commodity space, we see that the crude markets are pulling back off of their highs. Challenged $50 this morning, now trading at $49.62, down 55 cents. Watch the dollar. Dollar strength right now is going to be something that's going to be scrutinized. Also, after hours, watch the API data. That'll tell us whether there was a build or a draw in the crude inventories. The number I watched, though, is the EIA report on Wednesday morning at 10:30, but this just gives us a little bit of a preemptive type of idea of what we could potentially expect out of the EIA. Brent is up 20 cents. We'll watch that one very closely. Gold rebounding really nicely after pulling back a little bit yesterday. One thing that's notable about gold, you're seeing higher highs and higher lows. So the point being is that gold bugs, they're starting to get some momentum to the upside. Gold up $9. That's going to raise some potential yellow flags as far as uncertainty in the marketplace, which really is not priced in at all. Taking a look at the copper markets. Now, granted, copper has been moving to the upside. Most notable reasons are not as much supply on there, and the Chinese are starting to gobble it up again. So the bottom line is that when you start to see that kind of recipe being stirred up, you're seeing that copper is moving to the upside. Now, there was a pretty positive PMI coming out of China, and they are clamping down on a lot of institutions that have pretty hefty balance sheets. There's some violations that they found in the banking industry, about 40 of them. As far as the violations are concerned, they're clamping down on that. They want to tighten up on that risk. Let's see if that growth factor still continues in China. Taking a look at the bond markets, you're seeing in the bond markets right now, both the 10-year and the 30-year up on price, up about 1.25% respectively. This is the kind of move that we'll want to keep an eye on, because every pundit in the world, the former Fed chief Greenspan, came out and said this is the bubble, that the bond markets are the bubble. Prices are high, but there also is some uncertainty about what's going to happen here in the United States. We still have a lot of dysfunction going on in Washington. There is a lot of discord. We also have the North Koreans running around, testing missiles. You just have some components of this geopolitical and global marketplace that just basically isn't resonating quite well with investors and especially institutions. And despite the fact that the bond prices might be a little bit hefty, the bonds have come off of some pretty significant highs and are trading on their lows as of the last couple of months. So let's keep an eye on this very closely. This could give us an indication that if bond prices start to firm up and get through and settle above the 20 and 50-day moving average, especially on the tail end of the curve, the 20-year or the 10-year and the 30-year, you're going to start to see that maybe some uncertainty is starting to come into the market. Until then, you'll have to basically watch the VIX. The VIX continues to come off. It's now below its 20 and its 50-day moving average. We're not seeing that volatility rear its head yet, but let's wait until after Apple earnings. We'll be back this afternoon to talk more about what's gone on in the markets today, and we'll be watching Apple's earnings. See you then.